G'day traders, in this video I'm going to show you my most reliable and profitable entry that I know and how I trade it and how I use it and when I use it. So when we're coming around these bottoms here, we'll just go to the weekly chart straight away, and if we have a look at the weekly chart, when we see a high here and it comes down to the low tight trading, we don't want to be buying engulfing patterns here. We want to be buying them when they're breaking above moving averages like that. Even if we go up and get stopped out like later on, that's just what it is. But we want to keep on buying these. If it's going from a low to a high, this congestion area, we don't want to be buying them. Once we break out of this congestion area, then we want to be starting to buy them. This is the weekly chart, so this goes all the way back from like late 17 all the way up until now. So even down here, we don't want to be buying here, but as soon as we break the high, the base, then we want to be starting to buy. So just having a look at this one here, I'm just going to open it right up so that there's no mistaking it. Here, when we've come down here, we can see that there's a massive big sell-off with the biggest volume. Now you need to pay attention to this. This is on the weekly chart. So the biggest volume is usually what they call a blow-off candle, so a blow-off day. And so, it'll come down, sell off hard, and then all of a sudden we've got massive volume that's turned over here. And then we've got dojis. This is big money that's accumulating back in these dojis here. So it's come down. We've got a lot of indecision. Now decisions made. We've closed above 2 moving averages. We've got an increase in volume. This is good. And so I do remember I alerted this one here as a buy, and it's gone through here, and then we've got an engulfing, we've got an engulfing pattern here. I wouldn't have bought this one here simply because we're under 2 major moving averages. This could still very well come back down and test these lows back down here. But we've got a hammer, which is buying. I'm just going to open this up a little bit more so we can see it a little bit clearer. So we've got a hammer here, come back down on the 21, and then it's come back up, and then we've, buyers have started straight there, and then we've gone up there with a massive big push. And so usually, if you can see here, this is a 20% candle. This is bigger than any of the other candles down here that so far are in this run. So usually from an exuberant sort of a candle, we can kind of see that and expect that there's going to be some sort of profit taking or a little bit of a delay, which is exactly what happens. So when you see these, just expect that. Then we've come back down and we've got an engulfing pattern here, and then this one didn't work. We would have been stopped out on this one here. It's gone up, and now we're just kind of trading sideways, and back down. A lot of indecision here, closing back below the 200, indecision again, and engulfing. So straight away we've got lots of indecision, and we've got an engulfing pattern there. Stochastics are oversold. One thing I do like to do, definitely, if we've got our first buy signal here, from here on, and we're broken above these highs here, I want to be starting to put in, the stochastics oversold in that area. And I don't know where my toolbox is gone. My toolbox is up there, grabbing this square here. So when stochastics are in the oversold area, what I want to do is mark them out. So as soon as I've marked these out here, if we're coming down to these lows here, yes, you can actually mark these out and trade them, but you can see here how many times that this was actually in the oversold area before it actually gave a buy. Here we've made higher highs and higher lows, and we've come back down, and now we've got our first engulfing there. You could have been buying this one. It would have been quite risky, being out of the 200s, which I wouldn't really recommend. But we are talking about the weekly chart. It would have looked better and probably different on the daily chart, obviously. But you could have been buying the first green trade of the next day with the stops below the low there. So I'll just show you how I would have planned this trade out if I was taking this trade here. I don't remember if I was taking this one or not. It was a long time ago. Let's go to the so I would have been buying the very next day. It's very important that you wait for the next day to see if the buyers are still around. You can't just go and buy straight away the very next day, because the buyers might have gone, and the sellers might in pre-market have been selling and overwhelm the buyers. So this is the indicator that told me to get in, and this is the day that I would have been buying. Now let's just say that, and so if I would have done that, I can kind of plan my trade out like there. My stop loss will be there. So it would have been a 7.53 stop, and my risk to reward actually, as I said, I don't really like to place, profit targets, simply because usually you can get more entries in and your profit, you're cutting the legs off for a runner if you're going to be, setting profit targets, because often they will just keep on running. If you're in a bull market, you should let them run until the candles tell you to not let them run anymore. I'm going to get rid of this one here, and we'll just carry on. This one here, an engulfing pattern right there. So I would have set this one up as well. I would have been buying the first green there with my stops below the candle. That told me to get in. Or another thing that I like to do as well is, and that is, if I was to be buying this one here, and the very next day on the green, I'll be buying there. So I can set this up twice actually, and so if I set that up there like that, so now I've got my stop loss below, and I'll bring that right in. So I'm going to set up another one as well, and let's just say, and I'm going to do a little bit to the side. So as you can see, one box is deeper than the other box, and that's because I would have half of 1%. So if I'm going to risk 1% on this trade, I would have half of 1% risk below the red candle here, and the other half of the 1% risk below the actual candle that told me to get in. So I just kind of like to set them up that way, because I like to put 1% risk in on the first trade, and then when we're looking at the second trades here, I'm putting 0.5% risk in as we move up. So I'm going to get rid of those drawings there and move over. So here we've come down to the 50. We've got a beautiful hammer there, and it's come back down again and try it again, and we've got to bounce on the 50. So I actually like to buy as best I can. If we've got previous previous support, and then we've got support again, I like to buy the red to green move on this candle here. So let's open that right up so we can actually see it, and we'll see what's going on here. And then I'll get that tool again. So the very first green trade, I want to be buying there, and I would probably do the same again. I would probably have my stops either below this red candle here or below the low there, or unless I get a half there and then half there again. But here I'm only risking 0.5 of 1% instead of 1. And bringing that in there, and if we have a look at that there, so if we would have had our entries from here, another entry from there, and here we are at the top here, and still on the weekly chart. So far Bitcoin's done nothing wrong, even though we've had a bit of a sell-off and we're under 100,000 again. This is kind of wide and loose trading. We do have a hangman, but the pullback might have been, the turnover might have satisfied the profit takers at this stage here, because we're still trading above the 9 EMA. And so let's just go to the daily chart. We'll have a look at that. That's pretty much how I use the engulfing. So if you ever get stuck and your trading isn't working, or there's just something that you just keep on having losses, and things aren't working for you, I would reduce the pairs that I'm trading to about, say, 3 pairs, so you can just watch those ones very, very closely. And on top of that, I would be buying. So once we break out of this base, so let's just say that there was a base here, something like that there, let's say that's the base there. So we've got like the low of the base here. We can actually see we've got highs, and then making lows, high, lower, low, and then we've even come up here and failed there, come back down and found support. Now all of a sudden we've come up there, and something's changed here. So we can kind of see that all of a sudden stochastics are oversold here with an inverted hammer, and about probably 30% of the buyers came back in. This one here was the telltale to say that, hey, this trend has probably reversed. The biggest volume, stochastics oversold, around about 60% of buyers came back into the market. So if we have a look there, it's open, traded all the way down to here, and then 55-60% of traders bought back in before the end of the day on massive volume. So even though this isn't green, we can see that there's huge amounts of turnover. And then it's gone up to here. So I actually like to be buying the first green at this stage here with my stops 45% from the low, so more than 50% of that wick there. And you usually find that if you do that, then it's a little bit more risky sort of an entry, but this volume here stands out from all the other days that came before it. And it's gone up, and then it's come back down and found support on there again. And then we've got a harami, which is basically saying that the selling has stopped. This is orchestrated by big money. Now we've gone up and we've pulled back. Now we've got our first engulfing closing above 3 moving averages. Now we've come up, found another engulfing closing above all the moving averages now at this stage here, but it's come back down and found support on the 50. Now this one here would be a definite buy for me, because we've got a low, a high, a higher low, and a higher high, and we've come back down, found supportive action on the 50. Now we've got an engulfing pattern that's closed above all moving averages. This one here I'll probably buy, and even a break above those highs there. Look at that, we've found support on that there. I'll just draw a line there so we can see it very clearly. Okay, so here, I'll open that up so we can see a bit better. So here we've got resistance, and we've broken through resistance. Then we've pulled back and we've found supportive action on that resistance line there, the previous resistance. Here's an engulfing pattern there. You could have been buying there with your stops below here, even though it would have been a fair way away. What's that? That's 68,000 and then 65,000. There, it's not too far. It's around about 5%, 6%. which, like, for some traders it might be a lot of money, like the 6%. But, if it says, if the candles say to you buy, I just, pretty much obey the candles. So I would have been buying, I do like this one here. Don't like that it's below the 200. I do like stochastics are oversold. Another thing that I've seen here as well is very, very important. I would have been buying this one. The reason why is because divergence. So if we see divergence, I can't actually put that there. I'm just going to mark that and bring it over here. You've got to bring it over here, because if you try to mark it here, down the bottom here, you're going to be picking up one of these when you're trying to draw that trend line. So I grab that trend line again and we'll draw it again. Coming back down the lows here, grab it there and then put it to the high. Okay, so we got this stochastics moving up is basically saying, a low, a high, high, low, and a high, high. As soon as this blue's turned the red, the fastest stochastic, this is basically saying that there's more money coming into the market. There's like a flood of money coming into the market while the market's still trading down. The reason why there's still trades down is because big money want to orchestrate this and go all the way down, take out everyone's stop losses that were placed below here, so that they've now got all the stop losses. Now have a look at what happened. This is all, when you see divergence, it doesn't work every time. It works probably about 7 or 8 times out of 10. That's what you want to find. If you go back and find, things that happen around about 7 or 8 times out of 10, use those in your toolbook. Write some rules around it, and then so you can keep that in your back pocket. So when you see things like this, you can actually use it. But we need complements. We don't need just one thing that's going to tell us. Let's say we've got divergence here, and we've got an engulfing closing. Support on the 50, closing above the 9 EMA now, and we've got increased volume than the previous day's red, which is very good. I do like that as an entry. I would have been taking this entry simply because the divergence was there, and divergence basically means money coming in while they're coming back down to collect all the stop losses, and then the trend has turned from there, and look what happened to it. This one here, engulfing, I would have been buying that one there. This engulfing here, I would have been buying that one there, and this engulfing here, I probably wouldn't have been buying that one there, but I probably would have been buying the first green trade or the trade above that high there. I want to be buying. If you go through and mark down all of the engulfing patterns, so here you can see that I wasn't buying any of the engulfing patterns here, not until we got that massive big volume. Stochastics oversold, then things had turned around at that stage there, and then we've gone up, and now we've come back down, and like finding supportive action sort of here. This one here, a hammer on the 50, no, not a big fan of it. This one here, that does look pretty good actually. I do like that one there. I probably would have been interested in that one there, buying the break above these highs here. This engulfing here, it looks a little bit too high for me. I do like it though. If we've got a high, a low, lower high, lower low, or actually a high, low, lower high, and a lower low, we'll just mark that out a little bit longer. And then we've got from here, we've got a high and a low. So far we're still bouncing and finding support on the 50 moving average. So at this stage here, Bitcoin's done nothing wrong yet, not until we get a massive close with volume closing below the 50 moving average. But then we're going to go to the weekly chart as well, and we're going to have a look at the weekly chart to see exactly what's happening here as well. So here we've got like a Davis box sort of thing. We're going to just kind of extend that out a little bit, and we can actually draw another one of those up here. So we can kind of be thinking to ourselves, well, has it done the wrong thing yet at this stage? And so far it hasn't, even though it looks pretty ugly at the moment. We can see a lot of red around in the market. We are trading below the $100,000 mark, but maybe big money when it come back down to the 50 again, or previous highs, or back to down to the 9 or the bottom of the box, who knows. But all we can do is follow the big money and the market as best we can, and what we're going to do is capture these runs here, and we want to be getting out of the market, somewhere up, like in these highs up here, and we want to be buying down here, and the same again here. So if we're looking at the daily chart, the better time, or actually when the rice traders would have been selling on this trade here, was this day here. So I started selling some of my portfolio as soon as it turned red here, but I only sold about 40%. I was still 60% in. I'm still around about 60, probably a little bit more than 60% in now. All right, traders. Anyway, I'm going to leave it at that. I hope this has helped. But the engulfing pattern, it's not just buying only the engulfing patterns. It's where do you buy the engulfing patterns, and you got to be looking for these signs here. These massive reversal, patterns here. When we see massive volume when it's in the high, this is a warning that there's exuberance. There's a little bit too much. I'm just going to do one more thing. I'm just going to go through, and so this is that gold trade. So I've been buying gold for years now, and but this tells me when to be buying more gold. And I'm going to go through the weekly chart here because I want to show you something. So this formed a base here and then broke out. and then, you know, from there it went up very, very nicely. So on the monthly chart, I think it was like it was like 10 years or something. Oh no, that's way too long. Yeah. No, can't really see it. Look at that. Here we go on the monthly chart. We're getting engulfing off the monthly, and then have a look at what happened here. Another engulfing there. Then we're breaking new highs here on the daily. But you know, these engulfing patterns, stochastics oversold. What do you know? Bouncing on the 50, engulfing, stochastics oversold, closing above the 9. You know, if you keep this recipe in your back pocket and you know, if things aren't working for you in trading wise, and then you just keep this one, you know, and you use this one here, stochastics oversold. Supportive bounce on the 50 or previous resistance becomes new support, and you know, both is better. And then we're getting engulfing, closing above the 9. If you do that and just buy those ones there, you'll find that your account will grow. You'll get around about a 7 out of 10, you know, win-loss rate, and you'll get better and better at it. And you know which ones not to buy and which ones to definitely buy. And look at that. There's another engulfing there, another engulfing there, and then we've got dojis, you know, and away we go. Let's go back to the, we'll just have a very quick look at the weekly chart. Yep, look at that. 200 engulfing, closing above the 50. Bang. Stochastics oversold. That's a buy. And we've got divergence. We've got low stochastics coming into high stochastics, and we've got lower lows. So, you know, basically, you know, big money were driving this down while there's more money coming into the market. Very, very slight, but you can see it. And we've got the engulfing, closing above the, you know, closing above. That's your entry right there. And then this one here, I was buying that one there, and this downtrending line here, I was looking at it. And now, that's the weekly chart. Let's have a look at the daily. So, yeah, so this is one of my concerns here. I've got to stop. I'll just keep on going and going and going if you let me. Let's take that all the way to the high. So now we've got a little bit of a problem here with the gold. We've come down all the way down here. We've got an inverted hammer, 95% chance of reversal, and then it does. Who knows how, you know, we might only get 1 or 2 or 3 days, but we might get months and months and months. But, you know, this one here, 95% chance of reversal. Look at that perfect looking doji engulfing, and then that's a result. Here we've got a high, and we've breached that high and found a shooting star now, and we've got stochastics overbought. This isn't ideal, but we are in a massive big bull market here, you know, from this one here. So the reason why I got in here was that there, and it's come back down, you know, found supportive action. And this one here, the reason why I got in, you know, is because we've got resistance, and that goes back a fair way actually. Resistance, bang, buying that one there. So anyway, I got in those 2 positions there. I actually think that I got in, it was about 1800 was where I first got in and started looking at this one here. It was 1800. Oh, maybe 1800 was down on this one here. Yes, it was around about here somewhere. Let's just go and have a look, shall we? Why not? Just for the, you know, and I'll make this the last one, promise. Yeah, look at that here. So we didn't have stochastics oversold. They were down here. Look at that. Here we've got an inverted hammer, 95% chance of reversal, buy the green. So in this instance here, what I would have been doing in this instance here is we've come back down, we've found a harami, which is basically saying that the buying has stopped. Sorry, the selling has stopped. Inverted hammer. And then as soon as this closed here, I'm waiting for the very next candle, and that's traded red. That's fine, because I'm going to be putting my buy the very first second that this turns green. So bang, turns green, and I'm in, and away we go. Here we're getting engulfing pattern, close, you know, keeps on going there. Got another engulfing pattern here. Ooh, you know, like I might have been, I could have been stopped out there. Would have been very, very close if I would, you know, been holding it. But anyway, this one here, an engulfing pattern again. We've got divergence here, only tiny divergence. Oh, hang on, let's have a look at the lows here. I'm looking at this number here, L, on that one there. Low is, and I'm going to move those. All right, so the low on this one here is 1,617.30, and the low on here is 1,616.71. So this one here undercut these lows to take out all the stop losses before we had a nice run. Now, does this one take? Yeah, that's when the actual run starts. So that's 1600. It's 16 there, 1,600, and then we come over to here. And we've got an engulfing there. Okay, now this is another thing. If you get stopped out of your first engulfing pattern and you do get a second engulfing pattern, make sure you buy the second engulfing pattern, because you'll find that 9 times out of 10 these will work. And then, you know, if I was to be buying up here with my first green trade, I probably would have got in there. I could have had my stops below that green there, or below that red there, or unless if I would have been stopped out on this first one, I might want to take extra precaution and trade it below the swing low. You know, anyway, that's so, but you can see that the engulfing patterns, when they show up, they just tend to, you know, like they just tend to produce good results very often. And all right, traders, I am going to leave it there. Almost 20 minutes in. Okay, have a good day. Talk to you again soon. See ya.